Hey, good morning, everybody. It's Divestments coming to you with another short video. As always, my videos are for information purposes only. This is not investment advice. You trade at your own risk with your own money. So let's get going. All right. So first thing in the morning, we're going to pretend this was yesterday morning. I didn't get a chance to record the video yesterday. Um, but let's pretend it's yesterday morning before the market opened. All right. Before the market opens, the information that you need is the previous day information and the pre-market information. So I had the previous day high as being 564.32 and the previous day low was 558.95. And if you take that 564.32 minus 558.95, that gets you $5.37. All right. That 537 divided by 2 is going to give you that 268. And the 268 plus 558.95 is going to give you 561.63. So that's going to be the 50% of yesterday's move. And yesterday's move would have been the 4th. It would have been August 4th. All right. Pre-market, you have 566.72 minus 563.48, and that would have given you 324. That 324 divided by 2 is 162. 162 plus 563.48 is going to give you 565.10, and that's 50% of the pre-market move. All right. So you've got your two 50% numbers, 561.63 and 565.10. So I'm just going to go down and I am going to put those lines on my chart. I'm going to hit my annotate up here, which looks like two pencils up here. I'm going to go here. I'm going to go to my lines. These are your lines. If you click on that, it'll give you trend line, vertical line, horizontal line. We're going to go with the horizontal line. And we're going to go down to 561.63. So if you just click on here, you'll see the number pops up there on the left-hand side of the chart. So we're going to go up to 561.63. And I just go real slow till I get to 63. Okay, 561.62 and a half. That's fine. That's close enough. I'm going to change the color on here. Um, so I changed the color so that I can see it better. And then the next number that I'm going to get is my 565.10. So 565.10. I'm going to go all the way up. Okay, past it. Come on back down. All right, there we go. 565.10. So I've got my two numbers on my chart. All right. Oh, put an extra one on there. Don't need that one. All right. So now I'm going to go over, go back up, and I'm going to save this chart. Okay, it's going to ask me, do I want to say the changes? I'm going to say yes. All right. So now those numbers, those lines are on my chart now. So I'm trading off of the 565.10 and the 561.63. So the market hasn't opened yet, but I have these lines on my chart. All right, the market hasn't opened yet, but I have these lines on my chart. All right. So I'm trading off of this. So in my mind, I'm thinking if price gets above this 565.10, that's going to be room for a call. Okay. If it gets below this 561.63, I'm going to be looking for a put. But also too, I know that from the beginning here, before the market even opened, my 20 is above my 200. So it's in call mode, but it's been above my 20 for a while. So it's a good possibility that it could reach resistance, okay, sometime soon. I know this before the market even opens. All right. So now, boom, the market is open. All right. Now we're looking at this was the previous day. Now we're looking at current day, which is the 5th. All right. If I look up here in my legend for yesterday, I can see that the stock opened at 565.39. Okay. So it actually opened above my 565.10. Okay. So if you will get in on the open, okay, if you would get in on the open and you would have rolled it up, okay, to 566.51. That 566.56, I'm sorry, 566.56 is the high of the day. Okay? Because remember, none of this has happened yet. All we have is from the open, okay, from the 5th. So we're going from here to here. This is all the information that we have right now. Okay? So it made the high of the day. So what happens at the high of the day? Price could turn around. It could reach its resistance and turn around at the high of the day. And that's exactly what it did. So it got to the high of the day here and it turned around. So you've got a price mark and now you've got red candles going down, going down, going down, going down. All right. Off the high of the day. And then eventually you get the 20 crossing over the 200 to the downside. So at this point, once price gets below the 20 and the 200 on this cross down, okay, this is really your, if you didn't take it from the high of the day, because remember I told you the high, the low, and the close of the day are the most important prices of the day. So if you didn't take it off the high of the day, okay, coming down, meaning you didn't get in a put on the high of the day coming down, you definitely could have gotten in a put once it crossed over, once that 20 crossed over the 200 and you got all these red candles. So it crossed over around 563.25. So you could have rolled it all the way down to the all the way, I'm sorry, you could have got in around that price mark, rolled it all the way down to the 561, okay, 63, and then it broke down below that. So if you didn't get out before that, if you didn't get out before then, you definitely should have gotten out after it crossed over here. Because remember, before the market opened, this was resistance. I'm sorry, this was support. And this was resistance. Once the market opened and we made this high, this resistance, okay, price couldn't go any higher than that. So this line became resistance. So if you didn't get in, this would have really been your entry point, and you could have rolled it all the way down to here, which was your support. Or again, you could have gotten in here. This could have been your entry here once the 20 crossed over the 200 and down to here, which is your support. If it broke through there and gave you a little bit more, you took a little bit more, but you definitely would have gotten out down here because you would have gotten a price mark. Because at that point, at this point, none of this over here has happened. So this would have been the low of the day here. Okay? At the low of the day, and you would have had a price mark here. You would have had a price mark around that 560.27 mark. Okay, that was the low of the day. And even though you don't see a price mark here, it is the low of the day. And then it bounced up, came back down, bounced up, came back down, bounced up, hit its head on this 200, came back down, and that's how it pretty much ended. It ended down below here. All right. So that was the trading day for yesterday. We'll talk more about this in class. Have a good day.